All right. So I'm here with Dave. Dave has been working with me now for the last couple of years, and we've worked together on a few investment deals. This is the first time that you've actually sold a property. So we're going to go into a bit of a case study on the investment returns you've made on this rental property over the past 5 years. And we'll also kind of discuss sort of why you decided to sell it, what was your motivation for that, and what your next plans are. But yeah, Dave, why don't you share a little bit about maybe how you got started in this investment game?
Sure. Thanks for having me, first of all, Kogan. I appreciate it. Always welcome the opportunity to share my stories, as I've had so many people in the past help me with their stories and journeys that have got me to the place where I am. So thanks for giving me the opportunity. And I guess my journey started probably way back, I think, close to 2005. We purchased our primary residence home, and that was kind of spurred on by I read a article somewhere that said that the majority of millionaires became millionaires all had real estate in their portfolios.
Mm.
So I just thought that that was a prudent thing to do, since that's what a lot of people that were showing success at the time had. So we bought our primary home just as a safeguard for our family, and I always had the idea of purchasing an investment home after that, but just didn't have the courage, didn't know how to do it, didn't know where to turn. So I think fast forward to 2008, the crisis. I was actually in the hospital for a little bit, and the person in the room beside me was a Canadian, but he was just up here for a little bit, and he was from Florida, and he was telling me about all the properties that he was buying in Florida at that time. Like, he was buying houses for like $25,000, and it was just nuts. So again, it
Wow.
kind of just spurred my curiosity a little bit. And I think it fast forward again to probably like 2016, 2015, around that time. Um, I just finally got the courage, and I just Googled buying your first investment property. I just Googled it to see what would turn up. I think actually it was 2014. And I found an article by, I think it was Kevin Bojan from Dominion Lending.
Okay.
So I read his article, I gave him a call, and I ended up meeting with him. And that led to me becoming a member of RAIN, the Real Estate
Mm.
Investment Network, and purchasing my first house, or I guess it was like a townhouse in Aurelia, not knowing what I was doing, nothing about it, but it was totally turnkey. It came with tenants, and it was kind of like affordable at that time for us. So we just kind of went in and said, you know what, we'll jump in and we'll figure it out. So Kevin was really good at giving me some guidance, and I also met a lot of people that were involved in real estate investing through Rain. So that was a big boost for me, and a lot of shoulders to lean on when I had questions and needed some support.
Awesome.
Yeah.
Yeah, so I mean, since then, you've definitely done a lot to carry it forward, right? Your portfolio now consists of that single family home. You have some duplexes, you have a triplex as well. So you've definitely been able to build it up, and I guess even more recently, you've kind of switched strategies. So originally, you were buying turnkey, single family home, triplex, duplex, just as it is, keeping it, and then more recently, you've started to, I guess, got your hands dirty with properties that need renovation, hiring trades, getting drawings, dealing with the city, all of that. So maybe I should ask, why the switch? Because you were doing well even before, right? You bought a duplex that here in St. Catharines, you bought a triplex in Hamilton. Why the switch from turnkey to the next few properties you purchased, which were the conversions where we're adding the legal basement apartment?
I think there's a couple of reasons. One, I think it's I've always got this desire to to kind of create something. I won't say build, because I'm not into the trades at all, but just the idea of creating something new, or adding something, or creating something great. So that kind of also you know spurred my curiosity towards making doing some renovations, creating a home. And then it also was kind of, as time was going on and the markets continued to, go up, just looking at the numbers, the thought that by creating these duplex conversions, it was a way to, buy a single family home, increase the value of the home in the very near future, and then also increase the income that investment's able to create.
Yeah. Yeah.
So it's more, you're kind of buying a property at a single family price point
Mm.
and then turning it into a, two family unit and just increasing income as opposed to buying a duplex, which is already priced at a dual family residence.
Yeah. I think the one thing I know we've discussed at length is the quality of the properties and specifically the neighborhood, even the construction of like the build of the actual property. By doing these conversions, we're able to go into some of the nicer neighborhoods, the nicer streets, get, really quality homes that are well built relative to the existing multifamily duplex triplex. There, you can find some good ones, but they tend to be slightly older. They tend to be in, you can still get them in decent neighborhoods, but you're never in the prime neighborhoods. You're
Right.
kind of in those in between areas where, you can still get a good tenant, but you may have to screen a little bit harder, and there's just some quirks to it, right? Versus
Sure.
with the conversion, it's a lot more work up front, a lot of renovations, permits, a lot of effort put up front. But
Yeah.
once you've done the work, now you have something of value, something of high quality that you're going to get a lot more demand from the tenant side, right? Like even your most recent conversion in the city of Welland, where you converted that semi into a duplex, you rented out the basement for what was it, 1450 a month in rent, right? And
Yeah.
yeah, it's
Yeah. It was 1450 plus hydro, which
plus
was,
hydro.
we were very happy about that.
Yeah.
That was great.
Yeah. So I mean, for someone to pay that much rent for a basement apartment in the city of Welland, so this is not Toronto, this is not Mississauga, this is Welland, an hour and a half away from Toronto. Like it has to be something of quality in a good neighborhood, right? So you were able to create that. So that's awesome. So I'm calling this the semi-detached case study for your single-family rental. And so let's dive right in. So this is a property that just on the selling side. So we listed this property at 499,000. It was a little bit of interesting time, right? Because even our conversations leading up to the day we listed it, and even the first couple of days after we listed it, we were literally seeing the market change around us, right? Because January and February were
Yeah.
this craziness of multiple offers. March was kind of uncertain, right? Some homes were selling for less, some homes were not getting offers on offer night. So we knew that even though there were high sales in February, we couldn't necessarily count on those numbers being achieved in March because the landscape has changed. But we were still able to get this sold for a very good price. 636 is almost identical to the prices we saw in February, which at that time every home was getting 10, 15 offers. So
Yeah.
it was still a really good result. Days on market was 6 days. So we actually listed on a Thursday. Yeah, Thursday, and we were holding offers till the following Thursday. However, we got a preemptive offer initially on Saturday, but that preemptive offer was much lower. I think it was around 530 or so, right? We decided, yeah, we're not gonna take it because we knew there were a good number of showings booked for the weekend. So this was early in Saturday morning. We already had a bunch of showings for Saturday and Sunday, so we still wanted to see how it would go. But then by the Tuesday, we received another preemptive offer. So at this point, we we had already brought the majority of the people through the property, and this preemptive offer was now in the ballpark of what we were ready to accept. So we decided, you know what, why not yeah, we didn't want to turn it down and then potentially not get an offer on offer night. So that was still a risk in our
Playing in the back
minds,
of
right?
our heads. Absolutely.
Yeah.
Absolutely.
Yeah, so
Absolutely.
we knew at least if we accepted this offer, we'd be comfortable with the number. But then we utilized that offer. So I called back all the other agents who had shown the place to try to get some competing bids. So we got that first offer who offered on Saturday to come back. So we now had our second offer, but they came back again at a lower price. But anyways, it was offer number two. But because of that second offer, 5 minutes before we were going to review the offer that evening, we got a third offer, and they knew that there were already two offers on the property. So they then came in at this sort of higher sale price because they knew they were in competition. And I think it was an agent actually from Brampton buying for his daughter. So his daughter was the client, but from what I saw, I don't know this agent personally, but I saw that he was listed with a his brokerage is based out of Brampton. So my guess is that he probably just looked at the comparables in February that had sold, and I think the Brampton market is heating up right now versus the Hamilton market is cooling down. So he probably just thought that the cities are the same. If there's a sale in February at around this price, to accept this price, right? So
So that process, for us, that was just very, that was all new to us because, up to this point, all we've done has been buying houses.
mm,
So we're quite comfortable with that process. But this process on the other side of selling and what needs to be done to get the house ready to sell, and then just managing expectations. Like I think we spoke several times through those 6 days about what we felt the market was doing, and trying to manage I think you were trying to really manage expectations, but in the end it
yeah.
worked out very well.
Yeah. But definitely a lot of the prep work we did even before listing it went a long way, right? So many I see many properties, rental properties that are listed with the tenants in them, right? So one of the things we
Yeah,
discussed way early on is let's have a conversation with these tenants. It's a single family home. The buyer is likely going to move into the property. So let's just tell the tenants that ahead of time and, give them some small incentive to move out ahead of time so that we can get the place clean, painted, just prepared for sale versus trying to sell it with a tenant and struggle with showing, struggle to get multiple offers, and then kind of ask them to leave after the fact, which delays the closing. And there's just so many hassles that come with trying to sell a tenanted property versus kind of doing the work upfront makes it easier for the buyer and then it creates a better result for us as the sellers too, right? So
sure. That was a great piece of advice. I wouldn't have thought of that at the time, but it did work out. Our tenants were fantastic through the whole process. We gave them plenty of notice. I think we reached out to them back in November,
mm,
I believe. So they had some time, and then we were in touch with them throughout. They're checking in with them, saying, finding out how they were doing with finding new places to live and things like that. So, and then yeah, we gave them a little bit. We helped with some. We took care of their moving costs and
mm,
helped with give them a little incentive as well to help them
yeah.
find a new place. But overall, they were very very helpful.
Mm. And we typically find, I guess it goes back to first of all you buying a property in a good neighborhood, right? Because you bought a home in a good neighborhood, you attracted a good tenant. So now when it came time to sell, they were reasonable to deal with, and you know yeah, they understood sort of the reality, right? When you're selling a property, the new owner is going to move in anyways, so they were they were reasonably cooperative, and they yeah, you only so in the scheme of things, when it comes to offering tenants an incentive to leave, like in my fourplex right now, we've offered some of these tenants 5 grand and one of the tenants 10 grand to get them to leave. So it's a bit of a different story because they're paying like 500-600 bucks under the
Sure.
market rent, right? So
Right.
they know they have a good deal and they know that wherever they move to, they're going to pay much more. In this case, they were already paying a pretty decent market rent plus all the utilities. So, yeah, I'm sure their next place may be a little bit higher, but it's not, they were already paying a pretty good market rent even before. So,
Sure. Sure. Yeah. They actually, we spoke with them after the fact. They said they were paying a higher rent, not in as nice a neighborhood, and it wasn't as
mm,
nice a place. A smaller
mm,
place. Sorry, I shouldn't say it wasn't as nice. It
okay.
was a much smaller place. So I found that interesting, and just even I've always understood the value of a good neighborhood from attracting good tenants,
Mm,
but now this was actually different, just seeing the value of the good neighborhood on the sell side, because
yeah.
as you mentioned, there were other areas, even though the market apparently is very frothy, or there's lots of over asking bids, there were still pockets and areas where people weren't experiencing that.
Yeah. Yeah.
And
Absolutely.
we're fortunate that because it was a good neighborhood that we were able to take advantage of that.
Yeah, absolutely. So in when everything is booming, all neighborhoods will sell over asking. You'll still get good prices across the neighborhoods. It's when, like in this past month, when things start to get uncertain, the superior neighborhoods retain the demand because there's people that really want to live in those neighborhoods, so they keep the demand to a certain degree, right? To a certain
Sure.
degree, but especially like in Hamilton right now, in some areas of the lower city, there's definitely neighborhoods where things have cooled quite a bit, right? And it's basically out of your control when the market shifts on you like that. It's,
Yeah.
funny way, it was out of our control. Even this sale price that we got was definitely not what we were expecting when we initially had the conversation about selling the property. I think at that point we were looking at potentially selling it for 500,000, and that was like our first conversation about, if you remember,
Yeah,
last
I do
summer, right?
remember. Yeah, 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 I do remember.
Yeah. So, that really worked out in your favor. But on this sale, many people wonder what is the actual cost when it comes to selling a property. So, in this particular case, the commissions were 5% plus HST, so roughly about the 36,000. Legal fees were, I'm going to estimate about 1,500. It's somewhere in that range, 1,500, 2 grand. That's sort of the norm, right? And then we actually spent some money to prepare the home for sale. Not a whole lot. We didn't update it. We didn't renovate it per se, but there were some things that we wanted to do to especially overcome any potential objections that a buyer may bring us. So, I mean, why don't you talk a little bit about where this 8,500 went in terms of the prep stage?
Sure. Yeah, so well, obviously we painted the entire house to give it a fresh new look. Obviously, there was a few things, just some minor repairs, external and internal, that we had a handyman come in and just fix up a little bit, just to help with the look of the house. Some junk removal, some things that were left behind. There was like an old bike and lawn furniture, and just some simple things like that. And then we just also had a little work done in the attic, just to make sure everything was set. I think there were some shingles that had blown off from one of the windstorms, so we had the shingles replaced and everything to make sure that the roof and everything was sound.
I think a big one that we did that actually helped us out was with the home is a 70s built home, so it has aluminum wiring. So all the outlets were, probably 10, 15, maybe even older, right? 10, 15 years old. And the one thing we discussed is let's get all the outlets and switches replaced with the outlets that are safe for aluminum wiring. And actually, some of the questions I received from the agents that showed the place, I think even the one that put the first offer, so the preemptive offer that started the little bidding war we had, that agent did a pre-inspection of the property, and she specifically asked about the outlets, and that was one of the things that they needed to check off before they were ready to put the offer. So by taking care of it, we were able to tell them, hey, all the outlets are safe. They're with the correct outlet made for aluminum wiring, so you don't have to worry about the fact that the home has aluminum wiring.
Right.
We were able to overcome the objections even before they came. So it just helped to make it a little bit smoother, right?
Absolutely. Absolutely.
Awesome. Yeah, and the rest, cleaning, painting, I always recommend just, make it presentable, right? Even homes that need renovation, I really don't understand when people list properties for sale and it's just dirty. Like at the very minimum, clean it, because what if you have a buyer that is ready to do renovations, but if it's just a mess, if it smells, like
Yeah.
it, I don't
Yeah.
know. It's
Yeah.
simple stuff, right? Few $100, get a cleaner in there, just get it cleaned, right? It doesn't. I don't know. It's just it's almost like courtesy to me. If you're gonna ask
Yeah.
people to walk through your home, why not just clean it so that they get.
Absolutely. Well, that was one of the first things. So we actually had the cleaners come in prior to painting to make sure that the painter had a clean surface and all that, and then we had the cleaners come back again after the painter, just to make sure that there wasn't any dust or anything
Mhm.
like that left behind. So we
Yeah.
really wanted to make sure that that the place was as clean as possible. All debris or rubbish or anything like that had been removed.
Mm. Absolutely, absolutely. Okay, so altogether, cost of sale was just shy of 46,000, so 45,934. So let's dig into capital gains tax. So this is a question that most people, it's not the most simplest thing to calculate because it actually changes based on your income, and it's not the easiest thing to calculate. But so basically, this is how the numbers worked out for your project here. So you purchased the home for 331,000. You sold it for 636,000. Your cost of sale, like we discussed, was just under 46,000. So to calculate your capital gain tax, you have to first calculate what your profit is. What is the actual amount of profit you've made on this purchase? So we deduct from your sale price the cost of the sale and the purchase price. So we're left with a total profit of 258,000. The capital gains tax, basically the way it works is you take half of your profit and then you add that amount. So this 129,000, you add it to your personal income. Now, in this case, it's yourself and your wife that own this property. So we actually split this capital gain in two, so that it's about 65,000 that gets added to each of your personal income for this year of 2021. And though we basically ran the numbers, your total tax you'll end up paying on this sale is going to be just roughly 50, just under $54,000, which obviously it's a significant sum, but in the scheme of things, relative to the profit you've made, is significantly less than if you earned this as income, right? So it's a much lower tax than income tax, but it is still a significant amount to yeah, just to be aware of when you're selling a property, right? So
Sure.
yeah, so total tax 53,826. So let's dig into some of the net proceeds here. So again, a lot of numbers, but especially for those who are watching that may be really into the numbers, I'm just gonna cover the main items here. So sale price 363,000. Your cost of sale again just under 46,000. You have a mortgage on this property for 301,900. Now you purchased it for 330, right? 331.
Yeah.
However, the down payment of the property came from a line of credit from your personal home. So you borrowed it on a secured line of credit. You put
Yes.
that down payment. And then I think at some point along the way, you kind of merged or you made that into a mortgage as well, so that the mortgage on the home and the mortgage used for the down payment kind of became this one lump sum,
Correct.
which is that 301,000. So it's been paid down over the past 5 years that you own the property to this 301,900. So then once we deduct that the tax, so we're deducting cost of sale, mortgage, tax from the sale price, you're left with 234,333, plus you're getting back the money that you put as the down payment. So I think it's roughly $70,000 or so. You get that
Yeah.
money back, but in your case, your plan is kind of to, well, I guess I should ask, what is the plan with that initial investment?
Yeah. So the plan is to, we're looking to reinvest the money. So take the proceeds and the money that we get back from our original investment, and now rotate that money into another project that will generate a little more income.
Mm, got it, got it. So actually, that segues great into this next slide. So when it comes to the total profit,
Mhm.
this property actually had some positive cash flow on a monthly basis after your fixed expenses. You were mentioning something around 85 to $100, something in that range, right?
Sure. Yeah. Yeah.
Except that when it comes to owning a rental property over the long term, there are costs besides just your fixed costs, right? So I think we were discussing your estimate over the past 5 years is you probably spent something in the range of, $5,000 for all the miscellaneous like expenses. You'll have a plumbing leak here, replace flooring, just small,
Absolutely. Yeah. Yeah.
expenses here and there. So that $85 a month did its job. It helped cover most of those costs. So you didn't have to put it out of pocket, but you didn't really you weren't really able to take anything out of this property to fund any of your own spending or your own personal life, right? It was kind of just
Right.
self-sufficient in that way. So we've put the cash flow as zero here. And that's one of the big reasons we're selling this property, right? Because we're trying to rotate the capital into a duplex or a triplex, some project that'll allow you to create a much higher cash flow and have the potential for the same mortgage pay down and appreciation over the long term, but just to improve on that cash flow side, right?
Yeah. Absolutely. Absolutely. Like I think when we purchased the house at the beginning, we used the 20% down payment came from our HELOC, and the intention was to just pay interest only and just let it sit there as just interest payments until we sold the house. And then rightfully or wrongfully at that point where I was in my investment career or experience, 2017 hit and everybody was talking about how interest rates were going to go through the roof. And I had many people saying, you know, don't worry about it. And then I had people saying they're going to go up to 6, 7, 8% at that time. So we decided to lock in that money. So the cash flow, I think before that, it was maybe, 350, 370, something a little bit more manageable. But once we converted that down payment into a mortgage so that we could lock in the interest rate, we were now paying mortgage. Sorry, we were paying principal and interest, and
Mm,
that's what ate away our cash flow.
yeah.
But even still, we were still at a neutral position, or
Mhm.
slightly positive anyway. So we were comfortable with that at that time.
True, true. Yeah. And you can see, so the over the 5 years, you've still made some good profit from the mortgage pay down. Like everything else aside, 30 grand is still nothing to laugh at, right? Over the past 5 years. But obviously the biggest benefit has been the appreciation component, just because the market's done really well since you purchased this property, right? So our calculation, the appreciation after all of your cost of sale, after the capital gains tax, so this is your net profit from the appreciation, is just shy of $205,000, which is a very it's a very significant amount. And if we go into the next slide here, your return on your investment is bananas, right? So
Totally
you put
irrelevant.
in, so we calculated here with your land transfer tax, your closing costs, all of your initial investment was roughly 72,000. Your profit after taxes is 234,000, and your return on investment after 5 years is 425%. So 5 years, 425%. And we actually calculated that with compounded interest, that ends up being about 33.5%. And if for any of you watching who are really into the power of compounded interest, you know that even 8% compounded over a long period of time creates these ginormous results. But
Yeah.
imagine 33.5% compounding year over year for 5 years straight, right? It's, well, that's the the 425% in total, right? So I mean, after seeing this, how do you feel actually? Because it's we talk about it so much on the purchasing side, like this is the potential, but
Yeah.
you've now come to the end of one investment, right? How does it feel at the end here?
Oh, it's great. It's kind of like, you're always hoping that it turns out as well as you think it will, because when you're in real estate and investing, things like that, there's so many potential ups and downs, and at this point I was trying to follow the process of what other people have told me how they've done it, and how they were able to take their profits and move it into other investments and things like that. So we were always just we were extremely pleased that, what, this is what we were planning to happen. We believe we followed the right steps, and got a little bit lucky with the timing for sure. But yeah, we're really looking forward to moving on to the next project, and hopefully replicating to some degree the same results.
Yeah. Now the appreciation component, you know what? This is where it gets so funny, right? I think I've never promised a client that they can get anything more than a 5% appreciation a year on, I think, any purchase I've helped any of my clients. And so far, I've been wrong every single time. All of them have got more. Now, moving forward, who knows what's to come? But
Sure.
it's, I just base my decisions off of like a 5% long term appreciation. And so far the last few years have been really good for the GTA market, right? Anything in Southern Ontario has been doing really well. But in a funny way, your decision to sell is almost, part of it is to hedge your bets, right? Because by selling it now, you're locking in some profits now, and you're also shifting to a property with a higher potential cash flow, so that if maybe in the next 10 years, if the appreciation isn't as good, you now have a better cash flowing property that is a property it's easier to hold on to, especially if there are any hard times. So you're almost
Right.
protecting yourself to a certain degree.
For sure. Yeah. And that was more of it was more of, like when we run our numbers and our projections, so we use the same 5%. So, that's how we built our model as well. And, but when we were looking to sell this, it was really more about rotating, making the money work harder for us. When we
Mm,
thought that we needed the cash flow to be a little bit more in the event that something did go wrong, or the market changes, or interest rates really do increase. that we were in an investment that would be able to take care of itself.
Yeah.
So we wanted something that could generate. So we're, the last few projects that I've done, we've been able to create strong cash flowing properties because they've been duplex conversions. So we're slowly looking through the rest of my portfolio. I have some other properties as well that we're going to kind of evaluate and see if they're, if there's a need for us to, or if it makes sense to look to
Mm.
rotate them into better investments through real
Yeah.
estate.
Yeah, I mean, just on the topic of reviewing the other properties, for those who are watching who have more than a few investment properties, if you decide to sell all of them, if it makes any sense, you'd likely want to space them out over a couple of years, because the way that capital gains tax works is it gets added on top of each other, right? So the first property you sell, you may pay, say, a 10, 15, 20% tax rate, but then you go to the second and third, you're then in the highest tax brackets, which is still lower than income tax, but it's half of that, right? So it can go up as high as, I think, 26 or 27%. Um, so if you can stagger it, I know of people who've sold one property even in like December, just so that the next one can be in January or February, so that you get to split it over multiple tax filings, right? So, anyways, just a small point to note there, but absolutely valid points in terms of, yeah, rotating the capital, making your money work harder for you, right? Putting it into a property where you can add value through the conversion process by adding suites, right? Creating more cash flow and potentially creating more equity as well through the process, right? You're taking a single family
Absolutely.
home
Yeah.
into, a duplex or a triplex, right? Some kind of value add opportunity. So